Futures on the US benchmark indexes opened today with a mixed dynamics. On the one hand, investors are unnerved by geopolitical tensions. On the other hand, they hope for the soonest recovery of the global economy after the pandemic. Meanwhile, investors are puzzled. The market is trading cautiously as the conflict between the United States and China over the origin of the coronavirus flared up again. On Wednesday, Washington passed the bill which bars Chinese companies from U.S. security exchanges. Next day, Beijing made a move to strengthen control over Hong Kong with new security laws. This decision aroused an angry response from the White House. Donald Trump said that Washington would react very strongly. Further escalation of geopolitical tensions can push the US stocks to the bear market. Nevertheless, today, Wall Street is not given in to pessimism. The main stock indexes are on track to close on Friday, with weekly gains amid hopes for more stimulus measures. Investors believe that business activity will regain momentum once lockdown is cancelled in full. In the early North American trade, futures on the Dow Jones rose 0.18% to trade at 24,421. The S&P 500 climbed to the same extent. The US dollar index was gaining ground during the whole day on Friday, amid waning appetite for risk. In the early New York trade, the greenback halted its advance against a basket of 6 pairs. Its index settled up at near 99.70, that is 32 points higher than yesterday's close. Nevertheless, its price today is 68 points lower than the opening price on Monday. Tensions between the United States and China seems to carry on, so the US dollar is set to increase, especially against the euro, the pound sterling and the offshore yuan. Investors reckon that the trade deal between the large partners will be concluded sooner or later, because both of them are interested. The steady rally of the greenback is capped by financial aid expansion in the United States. Such massive support to the pandemic-stricken economy could undermine the US dollar and cause a roller coaster in other financial markets. Commodity currencies are trading under pressure amid a decline in oil prices, so traders prefer to buy safe haven assets, including the US dollar. The USDX pair gained 0.55% since yesterday's close. The pair rebounded again to the level above 1.40. The loonie is likely to have an opportunity to win back losses. It's too early to say that oil prices will extend the downtrend in the short term. The move in the oil market today looks more like a correction than a steady new trend. On late Friday, WTI futures with the nearest expiration dipped, trading at above 32 US dollars. For the whole week, Bitcoin was getting ready to test the psychological level of $10,000 per token, but its efforts were in vain. The most popular cryptocurrency got stuck in a trading range between $9,800 to $9,200. Yesterday, Bitcoin escaped the trading range, testing the level of $8,800. Today, the cryptocurrency is trading again above $9,000. The dominance index is 66.3%. The ongoing trading range between 9,100 and 8,800 is too narrow. So Bitcoin will hardly stay here for long. It makes sense to watch the direction of the exit to determine a further trend in the crypto market. If Bitcoin trades firmly above the level of 9,100, this will return to the previous range where it was trading for the most part of the week. In this case, analysts foresee another rate of 10,000. On the other hand, if the price declines to 8,800, this will open the door to the level of 8,500. Despite price gyrations, crypto investors still believe in the positive outlook for the most popular digital currency. The optimistic forecast suggests a rally to $50,000. That's all for today. We wish you profitable deals and have a nice weekend. See you on Monday.